BOJ maintains extremely low charges, warns towards sharp yen falls. Tokyo. The Bank of Japan maintained ultra-low interest costs on Friday and vowed to defend its cap on bond yields with limitless buying, bucking a global wave of monetary tightening in a show of salve to attention on helping a tepid financial recuperation. The yen fell as much as 1.9% and bond yields fell after the selection, which turned into broadly predicted however upset a few market players who speculated the BOJ could deliver into marketplace forces and tweak its yield cap policy. However, in a nod to the hit that the yen's current sharp declines may also have at the economic system, the BOJ said it need to intently watch the impact exchange rate actions should have at the economic system. Recent rapid falls inside the yen heighten uncertainty at the outlook and make it tough for businesses to set enterprise plans. It's consequently bad for the economic system and unwanted, BOJ Governor Haruhiko Kuroda told an information conference. At the two-day coverage meeting that ended on Friday, the BOJ maintained its 0.1% target for short-term charges and its pledge to guide the 10-year yield round 0% by using an 81 vote. The vital bank additionally stuck to its steering to preserve quotes at present or low tiers, and ramped up a program to buy an unlimited sum of 10-year authorities bonds at 0.25%. Raising hobby prices or tightening monetary policy now might add further downward pressure on an financial system that is within the midst of recovering from the COVID-19 pandemic's ache, Kuroda said, brushing apart the hazard of a near-term price hike. He additionally said the BOJ might not tolerate a rise in the 10-year yield above its implicit 0.25% cap, and had no plan to growth the upper restrict no matter pressure from rising international yields. There became hypothesis the BOJ ought to tweak coverage to cope with currency movements, but the answer from the imperative financial institution turned into no, said Shitaro Kugo, an economist at Daiwa Institute of Research. Kuroda's remarks highlight the BOJ's position as the sector's ultimate fundamental dovish crucial financial institution, as its friends aggressively tighten monetary coverage to shrink surging inflation. Caught in a dilemma, central banks across Europe raised interest prices on Thursday, a few by means of amounts that taken aback markets, in the wake of the U.S. Federal Reserve's 75 basis point hike. The growing coverage divergence among Japan and the rest of the sector has pushed the yen to 24-year lows against the US dollar, threatening to chill intake with the aid of boosting already rising import prices. The government and the BOJ have escalated their warnings in opposition to sharp yen falls, along with through issuing a joint announcement closing week signaling readiness to step into the forex market if important. We should carefully watch the impact financial and forex marketplace movements ought to have on Japan's financial system and costs, the BOJ stated on Friday, consisting of a reference to exchange charges in its policy statement for the primary time in a decade. Such worries over the weak yen, however, have not deterred the BOJ from defending its cap for its 10-year yield target by way of ramping up bond purchases. The yield cap has confronted attack with the aid of traders having a bet the valuable financial institution ought to regulate its coverage as growing U.S. yields push up long-term rates throughout the globe. The 10-year Japanese authorities bond (JGB) yield hit a 6-year excessive of 0.268% in early change on Friday, earlier than retreating to 0.22% after the primary bank's policy selection. Shortly after the statement, the BOJ made an additional provide to buy unlimited quantities of 10-year JGBs, consisting of those with 7 years left until adulthood. The BOJ is caught in a dilemma. With Japan's inflation properly beneath that of Western economies, its attention is to aid the still weak financial system with low costs. But the dovish coverage has induced a stoop in the yen, hurting an economic system heavily reliant on gas and uncooked cloth imports. With Kuroda having ruled out charge hikes, the onus may be at the authorities to fend off any in addition yen plunge, consisting of by means of intervening inside the marketplace to prop up the currency. Analysts, doubt Tokyo can get consent from Washington and other G7 contributors for a joint intervention, or that stepping in solo would paintings. There's a fantasy in the market and public that forex intervention works. But the fact is there may be not lots the government or the BOJ can do to stem yen falls, said Takeshi Minami, chief economist at Norinchukin Research Institute. I assume the BOJ will simply sit down tight and climate the typhoon.